Good evening. Welcome to Markets Today. I'm Lata Venkatesh. With me is Surabhi Upadhyay. And yet again, it was a huge day for the bulls. It wasn't just that the Nifty crossed the 8,600 mark and finished the closing above that level. The mid-caps had a huge rally, much better than the Sensex and the Nifty, up 1.25%. But the Bank Nifty just took it away 2% higher. Yes, there was some help from policy with the government saying, the finance minister saying that the gap between FII investment, that is portfolio investment, and foreign direct investment will be abolished or it will recede in many cases. But really, that was small help. It was just that all sectors seemed to be on fire. Hi, Surabhi.
Hi, Lata. Yes, and absolutely no sense of unease today, no selling at higher levels. It was just a rally. It was up and away, I guess, as they say. Let's start with the headlines. As the government abolishes difference between foreign direct investment and foreign portfolio investment, bulls take hold of Dalal Street. Global cues also support. The Nifty surges to a 3-month high, closing above 8,600. The Sensex gains 1%. All sectoral indices end positive.
The Bank Nifty surges almost 2% on hopes of more foreign investor interest thanks to the composite foreign investment cap. In an additional boost, CNBC TV 18 learned exclusively that the banking secretary has urged the steel ministry to consider SOPs like anti-dumping duty on imported steel to help 8 heavily indebted steel companies.
Mid-caps outperformed blue chips today, with that index gaining 1.2%. Pipavav Defence gains over 3% after Anil Ambani announces a 5,000 crore rupee investment in the business. GVK Power also shines on hopes of the company monetizing its airport assets.
Mixed day for the mid-cap IT earnings. Cient ends 5% lower on disappointing top-line growth, but Mindtree and Mastek deliver a stable set of numbers. Those were some of the headlines that dominated the market's mind space, and here are the experts that we have lined up on the show for you. Sanjay Dutt from Quantum Securities and Andrew Holland of Ambit Investment Advisors join in with their take on the markets on the corporate radar segment. We have Anil Ambani, chairman of Reliance Group, to talk about the company's big defense thrust. We will also listen in to Kiran Mazumdar-Shaw, the chairman management of Biocon. That company's subsidiary is planning an IPO. I'm referring to Syngene.
Okay, before we get to all that opinion and analysis, let's tell you what actually happened. The bulls are in charge once again. Markets rallied on once again thanks to the Greek Parliament voting yes for the bailout package and the government back home simplifying the foreign investment norms. Anuj Singhal is now here with more details. Anuj, no stopping the bulls today?
No stopping the bulls, and the classic adage is trend is your friend, and clearly the trend has been the friend of the bulls for last many days now, and today the market crossed the 8,600 mark, and not just that, actually closed above that. So that's telling you a lot about the internals of the market. What really helped the market today was the way the Bank Nifty performed. The kind of gains that we had in the Bank Nifty, 400-point rally on the Bank Nifty, and that really led the charge. Apart from that, even the mid-caps did well. The Nifty Junior has been making new lifetime highs almost on a daily basis, and the mid-cap index is almost there. Let's talk about the stocks that led the market higher. Well, private sector banks right on top. Axis, Kotak, Yes Bank, all up close to 4% in today's trade. Apart from that, some other stocks that gained ground. HDFC, that was up about 1.5%. Reliance was up 1%, and ITC as well, up about 1%. In fact, the rally was quite broad-based today. Take a look at the other Nifty gainers from different sectors. Tech Mahindra, 2.5% higher. Same was the case with BHEL, and BPCL also up about 2% in trade. There were some losers, mostly in commodity space. Metals were down, so stocks like Vedanta and NMDC down about 1%, and Mahindra was down about 1% in trade. Outside the index, some of the F&O stocks that looked really good were Tata Chemicals, up 6%, REC up 6%, and Wockhardt, that was up 4%. And in terms of pure mid-caps, you had stocks like Kesoram, GVK, Praj Industries, all up between 8 to 13%. So for now, the breakout is here, and it will be interesting to see if the Nifty can now make more moves towards getting back to all-time highs, because the mid-cap index is almost there, and Nifty Junior is already there.
Oh yes, that it is. Anush, thank you very much for that. And you can't argue with the ticker, you can't argue with money. We've seen positive FII flows and we have seen good domestic institutional investment money as well. But we mustn't forget that the fundamentals are not quite kicking in yet. Two small private sector banks which announced numbers, DCB and more lately, which was the other bank that announced, South Indian Bank, did not flatter at all with their asset quality. In fact, South Indian Bank was quite clearly a number which would put a little worry into your heads. You had not Steel Secretary, the Banking Secretary writing to the Steel Secretary saying impose some anti-dumping duty to perhaps protect steel companies, but that's hardly the way you turn bad assets into good. One wonders if that law will come, and even if that comes, one is not very sure that these heavily indebted steel companies will really turn around. In that context, why would there be such a huge rally in the public sector banks? All that makes you worry. There is a tide in favor of India for sure, because you saw crude prices inch down a bit. You saw gold prices inch down a bit. All this means that the Indian rupee has a lot to speak for itself. There is a stable currency, which is why you will always get FII money. So it's kind of liquidity feeding on liquidity. But if the rains don't oblige and if the results turn out to be as bad as the DCB and the South Indian Bank results are indicating, then maybe, at some point in time, much as you may say that technical barriers are getting crossed, let that worry also remain in the minds of investors.
Okay, that's a word of caution, and fair to take that as you're looking at these heady levels in the market. Let's get some opinion going as well. Sanjay Dutt, Director of Quantum Securities, says that the market at current levels is fairly valued and it could be heading towards 8,700 to 8,800 in the near term.
From a valuation standpoint, if you see the historical whether PE or all other indicators, we are reasonably valued, so we shouldn't really be up 3 to 5% from a Nifty standpoint, or we shouldn't be down 3-5%. We are kind of fairly valued zone. But I think there are individual opportunities even within the Nifty and otherwise outside the Nifty that needs to be looked at now. In the next 2 to 3 weeks, the RBI governor will have the policy coming in August. By end of this month, beginning next month, we'll have much more clarity on monsoon. And also, we've had now the Fed Governor Yellen speak, kind of being very explicit that yes, US economy is in a good shape, both consumer as well as the employment numbers. So it's kind of looking okay overseas. So if these 3-4 domestic events that I just spoke about, if they pan out positively, I think then next 3 to 4 months, the market will start getting re-rated. We would start looking at September quarter numbers. So then we probably are getting set for a breakout above 8,700, 8,800.
Okay, now that was a bullish note and well argued one, I must say. The cabinet today cleared the DIPP's proposal for a composite cap on foreign investments. This policy will club together foreign direct investment, foreign portfolio investment and investments by non-resident Indians. Composite caps have been suggested for sectors like agriculture, petroleum and natural gas, manufacturing, airports, real estate, telecommunications, among other sectors. According to the cabinet document, foreign investment will include all types of foreign investments, direct and indirect. FCCBs will not be treated as a foreign investment, but any equity holding by a non-resident Indian resulting from conversion of an FCCB or any other debt instrument will be considered as foreign investment.
One of the most important decisions in relation to the investment is the introduction of composite caps for simplification of foreign direct investments. ये जो FDI, FPI, NRI इन्वेस्टमेंट, ये अलग-अलग क्लासिफिकेशंस हैं, ये अब क्लब हो जाएंगे और इनको अब कंपोजिट कैप के रूप में माना जाएगा.
All right, that was the finance minister with the announcement. Now let's find out what experts are making of the DIPP's proposal for a composite cap on foreign investments.
I think it's a very pragmatic movement as far as the government is concerned on this step. And I can speak for the banking sector, where foreign capital is very integral to the growth of the country, for banks to raise more capital and be able to support the banking needs of the domestic clients as well.
I would like to believe that across all sectors, wherever there is no sectoral cap today, we are now breaking the barrier between FDI and FII. You could have done that in any case by passing a board resolution, which some of the companies did. But in effect, what we are now saying is that in sectors where 100% FDI is permitted, you could actually have a 100% FII holding, which is absolutely a very, very welcome step.
All right, now still in the realm of interpretations. Well, Varinder Bansal is here to tell us how sectorally companies can benefit or not benefit due to the merging of the cap on FII and FDI investments. Varinder.
Well, as a lot of experts have already told us, this is a great move for India especially. But if you look at for sectors, clearly 4 sectors which will benefit, immediately will be commodity exchanges. Watch out for MCX, that stock was up by nearly 3%. There is a composite cap of 49% and 23% by foreign portfolio investors. Foreign holders hold nearly 16-17% stake in MCX, so there's a lot of room if they want to buy more of that stock. Also, some of these rating agencies will benefit as well. CARE and CRISIL should be on your mind. Marketing infra companies and power exchanges are the 2 sectors which will benefit. 2 other important sectors where I think a bit of more clarity is needed will be private sector banks. We already understand that there is a composite cap of nearly 74% on private sector banks, especially Axis Bank and Yes Bank will be the biggest beneficiary. But important, a clarification which also came from Yes Bank was that they already have a vote resolution to take up for FI holding or the composite holding to 62%, and if people want to buy or a foreign institution wants to buy, they can buy from the market. But certainly it opens door for investors to pump in more money into the bank if they like that. Also, both the stocks, whether it was Axis, yes, they were up by nearly 4%. Also, a very important point which Mr. Dinesh Khanna was mentioning about 100% FDI being treated as 100% FI. So watch out for the defense sector. Could there be a chance that now you will have 49% FDI plus FI investment in this sector? If that is the case, watch out for most of these stocks. BEML and BEL were 2 stocks which were on fire. BEML was, I think, up 5 or 6%. So keep an eye on defense, private sector banks, but clearly it was the news which moved the market, moved the stocks.
Okay, all right, Varinder, thanks so much for that. So lots of buzz there on hopes of more foreign investment coming through. Moving on, the steel sector has been one of the most stressed sectors in the recent past, and things are not expected to improve anytime soon. Now, CNBC TV 18 learns that the banking secretary has sought an urgent intervention from the steel ministry, asking the steel secretary to consider steps to ease constraints of steel companies. We have Anshu Sharma joining in with more details. Anshu, what are some of the issues that have been raised, and how does the banking secretary want them to be addressed?
A worried banking secretary Hansmukh Adhya has sent an SOS with regards to the steel industry's worries to the steel secretary. He has written to the steel secretary Rakesh Singh saying that gross banking credit to the steel sector alone stands at 2.7 lakh crore rupees, of which 54%, which is around 1.5 lakh crore, is a loan for the 8 specified steel projects, which is in the tune of 1.5 lakh crore rupees. And these companies include Bhushan Steel, Electro Steel, SR Steel India, Usha Martin, Visa Steel, Bhushan Power and Steel, Monet Ispat and Energy. These 8 projects of the steel sector are facing issues of cost overruns, erosion of net worth and suboptimal level of production, which is around 60 to 70% capacity utilization for these specific 8 projects. Banking Secretary has asked Steel Secretary to consider steps to ease raw material availability and to ease the constraints of the steel companies. He has sought Steel Ministry's intervention to allow raw material access even for low-grade iron ore from NMDC SAIL and Orissa Mining Corporation. He has also asked Steel Secretary to identify logistical issues for transportation of the raw material, which is iron ore, and will benefit from the railways to transport iron ore for these projects. He has also stressed on the fact that steel industry needs protection from cheap imports, as well as needs an effective anti-dumping duty as well as levy of appropriate duties. In the recent past, we have seen that there have been mining ban, as well as global prices for iron ore has come down. In fact, few weeks back we have seen that steel prices have crashed, and cheap imports are coming from Russia, China, and we have free trade agreement with Korea as well as Japan, which is leading to high imports of steel, and domestic companies' interests are not being taken care of, and hence the companies are struggling with the credit exposure to these banks. So we'll have to see how seriously the government takes the issue of the steel manufacturers and how soon these issues are resolved. Back to you.
Well, thanks a lot for that, Anshu. Yes, government can take the steel debt seriously, but I don't see why as a customer or as a citizen I should pay more for steel simply because somebody misspent and built their steel plant at the wrong time with the wrong amount of money and the wrong planning. I find this ridiculous. Promoters should pay for bad decisions. They don't share with us their upside when steel was ruling at $1,200 per ton. Why should we share the downside if steel is at $360 per ton? Well, Anshu's story is great, but I'm not in the same page as the banking secretary or the steel secretary. Well, but that's not all on stressed assets. More and more debt-laden companies are queuing up to avail of easier repayment terms under the 525 scheme, as it is called. It's a refinancing scheme where 5-year loans are recast as 25-year loans. CNBC TV 18 learns that power companies like Reliance Power and Essar Power have sought bankers' approval to refinance their loans worth nearly 25,000 crores. Prerna Barua is joining in with the details.
Well, we understand that Reliance Power is in talks with lenders to refinance loans worth 15,000 crore rupees for its SAS and UMPP, and also a consortium of 16 banks led by the State Bank of India is expected to approve the refinancing in the next 3 to 4 months. Of course, we understand that Reliance Power's proposal is currently in the initial stages, but also Essar Power is in talks with its lenders to refinance loans worth nearly 10,000 crore rupees. Sources say that Essar Power has sought easier repayment terms for its loan, worth 6,000 crore rupees for its 1,200 megawatt Mahan plant that is located in Madhya Pradesh, and also about 3,300 crore rupees of loans for its 1,200 megawatt Salaya plant in Gujarat. Now, the current outstanding debt of Essar Power's Gujarat, that is the Salaya power plant, is about 3,000 crore rupees. And of course, we understand that the ICICI Bank-led consortium is likely to grant nod to refinance the company's loans within the next 1 month. In response to CNBC TV 18's email query, Essar Power has confirmed that over 80% of the outstanding debt has been refinanced under the 525 scheme for its Salaya power plant, and the residual amount is expected to be completed by end of July. Back to you.
All right. Thanks a lot for that, Prerna. So many ways to solve the bad debt problem. We'll take a break on that note, but coming up, more market opinion from experts like Andrew Holland of Ambit Investment Advisors. We'll also tell you about other stocks that were in the news today.